Hello everyone, welcome back to Crack Grade B. So today we are going to discuss the major highlights of our new FTP that has been recently released. Okay, in this particular session we are just going to cover the highlights but important ones so that you can understand that what have been the new changes, what is the thought process of the government when government has brought up this particular foreign trade policy. So before that, let's discuss. Before this particular policy FTP 2023, we were having FTP that was applicable from 2015 to 2020. But what happened in between 3 years? So that was the time of pandemic, and hence new policy was not made and updates were done in the old policy that was applicable from 2015 to 2020. So in this meanwhile, the government has also thought that why can't we make this process a permanent one? So with those intentions, government has said that now this policy which we have brought out, this is if we talk in the generic terms, it is going to be applicable till 2028. But government says that there is no time limit for its application, or there is no end date for this policy. This is going to continue as it is for indefinite period. But yes, as economy changes, as updates will be needed, so updates will be made in this particular FTP only, FTP 2023. That means now this is going to be a permanent item and there will be updates as per the requirement. I hope this is clear, right? And one more thing, why this thing has been done or why this concept has been brought out. So there is a logic behind this. See, in kinds of, whenever we talk about international trade, there is always talked about that our policies as a government should have a stability. If your policies are changing every year, every 3 years, like that, if there is instability, then it does not attract the foreign investment. Also, it makes the compliance difficult for the people who are doing the export and import in India. So this has various benefits. Obviously, firstly starting with, where we will be having stability in our policies related to import and export. Apart from that, there will be no hassle. It will lead to a continuous implementation of the policies, and as per the requirements your updates will be made, right? So with that particular thing, let's move forward and see what government has provided us in the highlights. See, so these are some data points. In these data points, there are few important things that we needed to cover. Firstly, first important thing is India is now the 5th largest economy in the world in US dollars, right? And nominal GDP by March 2023, it is going to be around 3.5 trillion US dollars, correct? Yes. Now in this particular document, see, there are so various things that you have to focus on. GDP growth rate has been provided by the government that it was 8.7% in the financial year of 2021 and 22. That came out 7% in the current financial year that has already ended from yesterday, correct? After that, government has also saying that we are projecting a GDP growth rate of 6.5%. This is the government's projection. Next is overall exports, including your merchandise as well as services. This figure we are going to see in our next slide in a little bit detail. So what you have to remember is what has been the previous growth rate, what is the projected, what the government has projected. See, there will be various GDP growth projections by different organizations, etc. But we always have to focus what government is providing us. So government is expecting that there will be a slowdown. Government is, right? So there is no point. What else you have to remember, that India is now the 5th largest economy. There are two things through which economies are checked, that at what level they are. Number one is obviously on the basis of their GDP, and the other basis is also purchasing power parity. So you guys have to tell that at what level India is in the world as per the purchasing power parity. Fine, find out this and tell me. So next thing, see some global trade scenarios. Global trade was impacted because of the Russia-Ukraine crisis, rising inflations, etc. In this particular document, what we have to see is what is important for us. This next year, what is our growth projections? No need to remember, but just have an idea about it. So government is saying that in the current year, that is the 2024, and even in 2023, you can see that India's expected growth rate is higher than the world's average expected growth rate. These are the IMF projections, right? Not Indian government's projections, but these are the IMF's projections. So even IMF is also saying that we are going to excel, we are having a good growth rate, and this particular having a good growth rate is always good because it attracts the foreign investors. If your economy is growing, if your economy is doing much better, then it is going to attract your foreign investors, right? So this is the global trade scenario that we were talking about. Now this is the important slide. Please remember the growth percentages, okay? I hope this is now clear to you. So you see world's export. Which year we are comparing with? We are comparing with the 2016. Why with 2016? Because FTP 2015, it was implemented from that particular year. So in 2016, the world's, do not need to remember these figures. No. We just have to remember the growth rate, and world's growth rate is also not important. World's export growth rate was 28% if we compare 2016 with the 2022. Moving ahead and talking about the India's exports, see over here, 2016 compared with year 2022, our growth rate has been in exports 55.4%, an impressive one, right? Compared with the world, we have done quite good in the exports. And when we compare the 2016 exports with our projections in the upcoming financial year of 2023, it is going to be 74.7%, right? So you see, we are actually recording a good growth in the exports related sector. Fine. So this is the comparison. What you have to remember out of this slide is the percentages. That is only enough. Now, before discussing about these, you should be knowing about that what are the top 10 exports item from India, correct? And that is why all these products that are given over here, those export related stories that have been provided over here, why they have been provided? Because we are focusing on the major export items from India. So let's discuss a few data points. Remember that if we talk about our export destinations, then USA is our #1 export destination, followed by UAE, and then followed by mainland China. After that, the countries, they keep on changing, but these three countries, they have been, they remain our greatest export destinations in the last 3-4 years, right? So their positions have not been changed much. Now, next thing, what are our top export items? I want you to study what are India's top 10 export items, but here I am going to tell you what are the top 5. So, mineral oils and petroleum originated products, these are our #1 export items. It is followed by gems, jewelry, stones, like these things. We have great manufacturing in India, and hence it constitutes our second largest export item. It is followed by your machineries, then followed by iron and steel, like these particular commodities, and after that organic chemicals. So these are all things that we export quite much. In whenever I talk about this, I am also talking about the drugs. Drugs means medicine. India is quite a large supplier for the medicines. So if we see, now this is also your homework, you have to see that what is India's exports in the world and at what place India is, but in terms of value and in terms of volume in your medical exports, right? Medicines exports, so to say. So now let's see the success stories of India's exports. Engineering, that is your machinery related. I told you this is in the top 5 export items that we export from India, and it has seen a growth. Now all the comparisons have been made compared to the financial year 16, right? 16 2022. Engineering exports is 81%. Okay. Then you have agricultural exports. It has had a growth rate of 61%. Agriculture export is also our largest, you can say one of the largest export items. But still, we are not doing that much good in agriculture. Why? Because we have our domestic needs as well. Followed by, you see, pharma exports. It has seen a growth rate of 45%. Followed by your electronic goods export, that is 162%. Now you see how much we have progressed in this sector, correct? Marine products export 63%, toy export 88.54%. Like these data items are there. Now we'll be talking about a little bit background of FTP 2015-20. Now there is not much to discuss about. What we have already brought in, all those things are there. So FTP 2015, it was supposed to end on 31st March 2020, but because of the COVID pandemic, it was extended, and obviously it was extended for the better, correct? India's merchandise and service exports is expected to cross $760 billion in the financial year 2022-23. So various changes, various export oriented schemes related changes have been done under this particular FTP. Yes, all those changes will be carried forward whenever we will be discussing the detailed document on the FTP. We are going to soon discuss that as well. But before we discuss that, in these particular highlights, you are going to see the major crux, right? Now let's move forward and talk about what has been the progress that has been made. What were the changes that was brought in? So first of all, the e-certificate of origin platform. See, this is very important. You must have heard that every product there is written that from where this product has been originated, whether this is made in India, made in China, made in Albania or any other country. You have to provide the country of origin. Why the country of origin is important? So that we know that this product is coming from which country. Sometimes it also happens, for example, suppose a China product that has originated in China may come to India via the route of Vietnam or any other Southeast Asian country. So this is very problematic for us. Why? Because it hampers our domestic industry as well. So that is why India, that is your DGFT, Directorate General of Foreign Trade, they came up with this e-certificate of origin platform. Here, so suppose all these products which are being generated in India, they have their origin in India, they have been made by the Indian manufacturers, they will get a certificate of origin, certificate of origin they will get, and for that they will have a online facility. They can access this facility and they will get their certificate. Next is 24/7 auto generation of IEC, importer exporter code. It is a 10-digit importer exporter code that is important, right? No one can do import export in India if they do not have this kind of code. You can compare them with the PAN, etc. You can also talk, you can think like that this is an identity which is provided to the importers and exporters, and now you can generate this 24/7. So this was the progress, this was a way ahead. Next is trade facilitation app. So under this, all the information on the foreign trade policy, what are the export import statistics, what are the statuses of application, and 24/7 assistance will be available. For example, just like in the times of vaccination, we were having CoWIN app. All the informations were available on that particular app, right? Where are the vaccination centers? How many vaccines are available? What time slots are there? Which time slots you can book? So similarly, trade facilitation app is there. It is going to provide you all the kinds of information that you will be needing for your exports and imports. Now next is ERCMC. electronic RCMC registration cum membership certificates. So what happens is your exporters, they are the members of the export promotion councils. Export promotion councils means these are those organizations which work for the benefit of the exporters. They enable them to export more, right? Various government schemes that are brought in for the benefits of the exporters. So these export promotion councils, they become the mediator and they provide the benefits of such schemes to the exporter. So if you want to take the membership of any particular export promotion council, this is the tool that you have. Correct? ERCMC, it is digitization through common digital portal for the issue of RCMC by the export promotion council or the commodity boards. Next is the COVID help desk, contact center help desk services and national trade facilitation action plan under the implementation. So these are all the generic things that we do not have to know much in detail in the highlights, because anyways we are going to discuss them when we will be discussing the whole FTP document. The focus of this particular highlight is that we aim what the changes that government has brought in. Okay, let's see. The self-ratification special advance authorization that we are going to see in our new FTP, that is FTP 2023. So under this FTP 2023, the government is saying that FTP 2023 will be announced to provide the policy a continuity, right? We want the policy to flow continuous. We do not want to change again and again. Number one point that I have already told you. Subsequent revision of policy will not be linked to any date. Any time whenever government will need that, yes, there is an update which is required, government is going to do that. Fine. So there is no expiry of our new FTP 2023. This is what they want to communicate. Next, these are the approaches. Approaches means these are the focus areas of our new FTP. That is, we want to move from incentives to remission. Okay, ease of doing business, reduction in transaction cost and technology interface, export promotions and e-commerce developing district hubs and SCOMED policy. This we are going to talk about. Now just I would like to tell you this thing, that is incentives to remission. What happens is, what is the difference between this? In both of these, government is giving the benefit. But understand, incentive can be provided to various exporters as well as the other people who are involved in it. But remission means, incentive means that we are giving you the benefit and now you perform, right? But what is the meaning of remission? Remission means government says first you perform and then whatever duty will be charged, we are going to remit it. We will not collect it. So in both the approaches, the difference is that in one approach, that is incentive approach, the exporter is said that please perform in future, but there is no guarantee of that. And in remission, the person has already performed, the person has already exported, so that you have the surety that whatever remission you are doing, it is actually bringing you the foreign exchange. So that is why this particular approach has been changed. Okay, now let's move forward and talk about from incentives to remission, what has been the changes. So introduction of duty remission scheme. Scheme for remission of duties on exported products and remission of state and central taxes levies notified with the objective to remit the taxes which has been paid on notified goods exported. So there is a list of goods. If you are exporting those particular goods, then whatever duty is applicable onto that, we are going to remit it. Now I'll tell you why it is. So many of you might be know about this particular concept. See, government always promotes the exports. Government always does that. Why does it do promote the exports? Because it brings us the foreign exchange. Foreign exchange is very crucial for us because our imports are non-elastic. Non-elastic means we cannot reduce our imports considerably, and that is why our balance of trade is a little bit twisted. Correct? We might have to bring out the money out of our pockets to pay the foreign currency, foreign exchange debts, right? So for that particular thing, the government wants that our exporters should do exceptionally well and they should be able to earn the foreign currency. So for that purpose, in order to promote them, in order to what you can say, provide more of a support to them, government has brought in this particular scheme. Continuation of duty exemption scheme. Duty-free inputs, raw material from overseas suppliers through domestic suppliers being ensured through advance authorization scheme. Technical upgradation, duty-free import or indigenous sourcing of capital goods under the EPCG scheme. Now, what is this EPCG, Export Promotion Capital Goods Scheme? See, what is this in this particular scheme is, for any kind of product manufacturing, we require machineries, right? Capital goods, I'll simplify it and I call them machineries. So for any production, I require machinery, right? It might happen that the machinery I am looking for is not made into India, okay? That is made into in some other country abroad. So government is saying, fine, you import the machinery, right? Whatever duty you are going to pay on this import, we are going to waive it off. We will not collect, but we have a condition. So you asked what is the condition? So government said that in next 6 years, you are going to export 6 times of the value of duty that you have saved, right? So government wants whatever amount of duty government has waived, government wants 600% of foreign currency exchange earning on that. 6 times 600%, same thing, right? So this is called as the export promotion capital goods scheme. Government is allowing you the import of such kind of capital goods which are important for your manufacturing. You will import those capital goods, you will manufacture your items, you will export them, and that is going to bring us the foreign currency. So this is good thing for us. Understood? Now this is what we were talking about it. Continuation of the duty exemption scheme. So your duty-free inputs, raw materials from overseas suppliers or through domestic suppliers, they will be ensured through the advance authorization. Now what is this advance authorization? We are also going to talk about it here. Okay. EPCG we have already discussed. See over here. So under this particular thing, the government is aiming for the ease of doing business. How ease of doing business is ensured? So whatever time is being taken, government reduces it. Fine. So this is what is happening over here. Export promotion schemes processes for managing the life cycle, import licensing, they have been made completely paperless and online. What you have to understand, we are going to discuss these schemes in the original document in detail, although I am going to discuss a little bit detail over here also. But please understand, in this particular part of highlights, that various government processes has been made paperless and they have been made the online process. Next is the automatic system based approval of FTP applications. So your applications will be approved online automatically. Like you can assume that even in your income tax returns, you file your returns, right? Whatever you think, like you file your returns, they are accepted, but routine scrutiny is happening, and when government finds that okay, something is fishy in this particular return, then government goes and checks about them. So similar kind of thing is applicable over here as well. Now you see the different kinds of export related schemes. EPCG issuance, we have already discussed that please import the machinery and whatever duty you are going to pay, we are going to off it. You do not have to pay that, but you have to ensure that you do an export of at least 600% of the duty that you have saved, and please bring us the foreign currency, right? This is the obligation. This is called as export obligation. You have to do this, correct? Now next, this is your advance authorization, revalidation of authorizations. This means this is connected with that, and export obligation period extension. EPCG, government is saying under EPCG that you have to achieve this much value of exports within 6 years. Now what if you are not able to complete it within 6 years? So if you are going for the extension application, this is pertaining to that. Now I would like to tell you this advance authorizations issuance. So what is advance authorization issuance? Understand this. Suppose I am making a particular item, right? And this is intended that I will be exporting this item. Fine, number one thing. Number two thing, the raw materials which are required to make this particular item, I have to import it. Correct? What I mean to say, in order to produce the output, I have to import the input. Correct? This input is going to be utilized in my output physically, and then they will be exported. So I have already told you what government wants. Government wants the exports to be higher, higher and higher without any limits. So government is saying that, dear, if you are importing any input, in order to include them in the exported output, then we are not going to collect the duty from you. For that, you can take the advance authorizations. They take advance authorization from us, and in order to export, freely import the inputs, right, without any burden of duty. So this is called as the advance authorization. And if you have to revalidate your authorizations, then these are the current processing times that are ranging from 3 to 7 days, 3 to 1 month, 3 days to 1 month. So now under automatic processing, they will be in 1 day. They will be conducted within a day, and this is the change that has been brought. Nicer change, right? Next is application fees. What is this application fees? So understand this first of all. It has been reduced for the advance authorization and EPCG scheme for MSMEs. These MSMEs, they are beneficiaries under this particular scheme, 55 to 60%, right? We have already known in our one of the lectures that MSME do contribute a higher share of foreign exchange earnings for India, because their work is such like that they are made from the orientation of exporting. So MSMEs are very important for us, and that is why we have reduced the fees for them. Now in this, first of all, understand these are the values. Now you can understand these values. If I talk in a layman's term, they are the turnover. In normal companies, like we have sales, right? So this is that turnover, but export turnover, right? What amount of goods you have exported, depending on that. Also called as the license. Some call it as a license thing. Some call it as a CIF value. Now what is CIF value and FOB value? These are the two terms that you will come across in the FTP document. What are these? So these are CIF and FOB. So I'll tell you what, these are the value of the export that you have done. CIF meaning when seller is exporting to the buyer, then if he is exporting on the CIF value. CIF value means cost, insurance, freight. That means all of this is the obligation of the seller. Till the time the goods is not reached, has not reached to the buyer, the obligation is with the seller. So this is called as the CIF value of the goods exported. And what is FOB? The free on board. Free on board means seller's responsibility is ended. Now from here on, whatever insurance, freight related obligations are, that rests with the buyer, and there is no obligation on the seller. So what thing we are counting over here? We are counting CIF value. If you are having the CIF value up to 1 crore, this is the amount of your export turnover. Or your export turnover is lying between 1 crore to 10 crore or above 10 crores, then in that particular case, this is going to be the fees for non-MSMEs, and for MSMEs this is 100 rupees, 5,000 rupees and 5,000 rupees, right? So this is how your fee structure is going to be for the MSMEs. What you have to remember, please do not try to remember these. You just have to remember that yes, the fees has been reduced For what? Advanced authorizations. I have told you what is advanced authorizations. When you are importing the inputs for exporting the outputs, and these inputs are going to be included into your output, right? After that, EPCG scheme also I have told you, when you are importing the capital goods, right? And these capital goods are then these capital goods are used for the production, and then output is exported. So these are all the benefits that has been provided, right? Next is process re-engineering. So it is undertaken from okay, fine. So we are going to cover that in our next lecture. There are still a few of the things that I want to discuss, but I'll keep this lecture short so that you guys can tell me if any problem that you might be having. If any concept that you were not able to understand, please write to us. I will try to include that in my next lecture. And thank you so much for watching this. If you did understand this, then please do not forget to give us a like. Okay,